Okay, here we go. August 17th, 2025. Today's social climate, Matt Anderson. Apologize for my hiatus. I went out of town. I went out of the country for a good 3 weeks out to Europe to go to see Greece and Italy on a cruise. It was a wonderful time, excellent time. I'm back now. I'm here to discuss more financial markets with you and see where we're going today. Um, what's going on? More of the same, more of the same, more manipulation, more malinvestments, more of the same usual nonsense. The government tells us that the labor statistics or unemployment is rising. Donald Trump goes in there and fires the lady because she was appointed by Joe Biden. We have more manipulation of government numbers. This is par for the course when it comes to the U.S. government. Why should anybody be surprised whether it's Donald Trump or Joe Biden or Obama or whoever's in there? You're not going to get real numbers. The real numbers are for you to observe on your own. Go to the restaurants, go to the shops, go to the hotels and see if they're still packed. Determine whether or not, from your own perspective, or maybe hire a private company to give you the statistics that are actually really true rather than what comes from the government. Because what comes from the government is just a complete and utter lie in order to design a narrative to make everything look rosy, and that's their job. Their job is to quell the masses and calm them down and make them feel that everything's okay, everything's wonderful. Keep buying stocks, and then the stock market has gone up quite a bit. It continues to rise. It blew past all-time highs. It's continued to go higher on a trajectory unknown, unforeseen. But here we go. Anyway, eventually this thing's going to crash, but as of now, the faith remains in our leaders. Donald Trump has garnered some sort of support from Wall Street, and he's doing a wonderful job. He's doing a wonderful job, everybody, because he's keeping this house of cards glued together. Without him, this whole thing comes down. Or does it? Does it really matter who's the president? I mean, it didn't come down under Joe Biden, so why would it come down under Donald Trump? Animal spirits remain. People are happy, people feel good. They still see people shopping. They're keeping the economy together to some extent. The thing has already collapsed, but they're keeping it together with chewing gum and fishing wire, and they're doing a great job. But I don't really want to talk about that too much today. I want to talk about investing. Pick up from my theme of a few months ago, because I haven't been on this channel for a few months, and I do apologize for that. I figure the algorithm will keep me in the penalty box and not allow me to have any more subscribers, or anybody out there will see these videos, because, except maybe a couple bots and maybe one or two individuals, because I don't post enough videos. You see, YouTube likes people to post on a weekly basis, or a few times a week, or the multiple times a week, or multiple times a day. And I need to do that more often. I really need to, but I just don't really find the motivation to do it when I only am doing this for myself. But nonetheless, this is a good exercise of faith. I was recommended by a very successful billionaire at one point in time in my life to actually start a YouTube channel and to develop a rapport or some sort of personality, online personality, to be able to solidify my thoughts, know how to talk, keep a conversation going, be entertaining, so on and so forth, because it's good in sales to be able to do that. And if you can't talk to anybody and you're shy and you just keep your mouth shut all the time, you're not going to really go anywhere in life. You're always going to be in the same area. And that's okay. That's probably where I'm going to be, but we're going to do this anyway and see what comes about. Now, investing. I talked about investing, compounding wealth, speculative investing, taking speculative gains, investing them into real hard assets, real assets that produce cash flows into the future, beyond the future, stable dividend paying companies that pay, north of 10%, annual compounded over the long run. This is how you generate wealth. You take your savings, you take your excessive savings, you put it into these assets that produce cash flow, cash cows, stable companies that aren't going to go bankrupt anytime soon, have great balance sheets, great commodity, great product, great service that's going to continue on into the future, and you have to do your Benjamin Graham analysis to figure out what those companies are. But there are plenty of companies out there that can do these things and that you want to buy, and that's another thing we talked about last time, was you want to buy these companies at a discount. You don't want to pay overpriced valuations for these companies because it's going to be harder for you to make a long-term return by overpaying for good assets. So you want to wait for sales, and there's always sales available in certain sectors. Now, you could look at tech stocks, no sales available there. You could look at many stocks, and a lot of sales are not available out there. But if you look at oil and gas, there's lots of sales to be had. I mean, I don't know all of the different sectors of the economy or to invest in that are trading at a discount, but if you talk to some real good analysts, they would give you lots of different sectors of the economy that you could invest in that are undervalued at this point in time, despite the overinflated debt bubble that we're currently living through. There's still some good deals to be had out there, and so if you have excess savings, you can invest wisely and accordingly into these assets that are trading at a discount that are going to pay you dividends into the foreseeable future. And this is how you build wealth. Compound it over the years, save as much as you can, earn 10 to 15 to 20% annualized returns, and you'll live a very happy, comfortable life, and just keep compounding and become rich. This is how the rich become rich. So that's one aspect. The aspect I want to talk about today for the next few minutes, because it's going to be a short video, is speculative. I think I addressed this last time I had my video, and speculative investment, speculations. Now, what I'm going to start studying myself and start learning myself is speculative investments in certain sectors within the economy using call options and put options. Taking the generated cash flow returns from the call options and put options and reinvesting them into stable blue chip companies that pay dividend returns on a year-over-year basis. These are called investments. Okay, so we're going to differentiate the two. One is called an investment. This is what I just previously discussed, that spit off cash flows and great returns over the long term. Blue chip, stable companies trading at a discount. So that's number one. Number two is speculative investing. Speculative investing can earn you a lot of cash. You could take this cash and reinvest it into the investments, and you make lots of money and you become wealthy over the long term. So speculative investments, which I'm going to be studying, are natural gas futures, for example, oil and gas futures, gold futures. And I'm not a futures trader. I'm talking about you watch these futures, you watch the trading patterns of these commodities, housing, entertainment, whatever sector of the economy, hospitality, copper markets, coal markets, uranium markets. Pick a few of them. Find out where they're trading tech stocks, where they're trading in this period in time. Try to determine whether or not they are in an uptrend or a downtrend or a sideways trend and invest accordingly. For example, you could do something that's relatively safe. You could take a company like Cameco, which is the largest, I believe, the largest uranium producer in the world, and we could take the commodity uranium and we could say, okay, let's forecast out 5 years from now and determine whether or not uranium is going to grow or decrease in the long-term usage in the electrical industry, the power generation industry. And you can make these forecasts and these assumptions that, okay, uranium's going to go up. There's a 70% probability that uranium's going to go up. So now you look at a company like Cameco and you say to yourself, okay, I think within a couple of years uranium is going to go up. My forecast, and from my analysis and all the studying that I've done, I know beyond a shadow of a doubt uranium price is going to increase. So you could buy call options on Cameco going out a year or two. And you could hedge your bet there. You have a hunch, you bet some, not a bunch, but you bet some. and you put a little bit out there. You say there's a 70 to 80% chance that Cameco is going to go up in value during the next uranium bull market. So I'm going to buy call options in Cameco. You buy them out a couple years. Say your forecast comes true. Uranium goes from $100 a pound to $200 a pound. Cameco shares go from, I don't know where they're trading today, 80. I don't know what they're trading at. I don't even know. Let's say they're trading at $100 and they go to $200 and you buy a call option at $150. Well, now you just made a shit ton of money. So that's one way to do it. That's one industry. I'm just using that as an example. You can use Cameco call options because Cameco's the best. You want to use, in my opinion, you want to use the call options of the best companies. You got a hunch in oil that oil's going to go up in value. Futures markets, supply and demand fundamentals, oil forecast going up. You want to buy ExxonMobil or Chevron, and you buy call options going out a couple years. And so you can do this. You can have these forecasts. You could do your analysis, your fundamental analysis on the supply and demand fundamentals for these commodities or these assets or these industries. Tech is another one. I'm just throwing out a couple examples. Tech, AI is the latest craze. You could be buying call options on all these AI stocks that are in the midst of the fire, that are on fire, and you can make a ton of money, sell your call options, take the profits and put them into an oil and gas royalty or Hershey's chocolate company, stuff like that where you're going to get a good dividend. Investments like oil and gas royalties or Hershey's chocolate company or whatever, ExxonMobil. So these are the things that I'm going to be doing. I'm going to be studying. I will share with you what I found out. Of course, this is going to take lots of analysis of what industries I want to buy call options in and the best of the best companies. For example, best of the best in oil, which I mentioned, ExxonMobil. Call options, you think oil and gas is going up, you think oil and gas is going to crash, then you buy put options on ExxonMobil. Without getting into the futures markets or the ETF market too much. You can get into the ETF market, and that's something I will look into as well. But you could buy the best companies in the best industries, and by call options, you think housing's going to crash. Well, I think there's a 70%, you can say this to yourself, I think there's a 70% chance that housing market could collapse in the next 2 years. Then you would buy put options on D.R. Horton or a specific housing, real estate, art, REITs, whatever. You could buy put options because you think it's going to crash. You think the S&P is going to crash. 70% probability. All these are based on probability. So you probably want to do your analysis, determine what the probability of success in these bets, and speculations. Invest accordingly. Use a lot of money. Just say, I have an 80% chance that I think natural gas is going to go up. It's going to double in the next 5 years. So you just start hedging these bets. And a lot of this is what they do, I believe, on Wall Street, these big money men. And they do this successfully many, many times. I'm sure they have losses at times, but they have more successes than their losses. And so that it amortizes your losses. The successes amortize your losers. So then you become successful at it. You make a positive cash flow. You reinvest the cash into the undervalued investment side of your portfolio. And you go weave in and out from speculation to investment, investment, analysis, forecasts, quality companies, blue chip companies, investments, reinvest the dividends, reinvest everything, take your excess of savings, buy this stuff, and you just keep compounding your wealth over time, over periods, and you will become wealthy enough to retire, to go move to Mauritius or Tahiti or wherever you want to go, and go sit on the beach with an umbrella, drinking a margarita, watching the waves crash, and watching your little bikini girlfriend, wife, whatever, sitting by your side, watching the waves crash and the sunset going down over the sea. I mean, these are wonderful things. Wonderful time to be alive. There's lots of speculation out there. There's lots of malinvestments out there. There's lots of opportunity. And I have to correct myself in my own investment perspectives or behavior. I've kind of given up on things, for the last 5 years. I really just have been disengaged. I put a couple bets out there on gold and oil and gas, and I figured, these things are going to make me rich one day, or shorts on the S&P. And I'm kind of changing my strategy now. I'm like, why get fixated on a few different industries? Shorting the S&P, being long gold, being long oil and gas. You know, why settle on these small these have be myopic and only three-dimensional on a few different industries? Why not spread out on other industries or on other potentials out there? So that's what I'm going to be doing. I'm going to be analyzing sectors, different sectors within the economy, going long, going short, using call and put options to make some excess of cash, using the leverage of option trading to get the big money, not investing in the stocks, even though you could make money in the stocks, but buying the options. The options pay you a lot of premium if you know how to do them correctly. And so if you got a hunch, you turn out to be right in a specific sector, for example, uranium, you can make a lot of money. You can make a lot of money. And I did this last year when I had a hunch and I bet a bunch in Franco-Nevada, a gold royalty company. I netted, I don't know, $11,000 to $12,000 within a couple months by buying call options on Franco-Nevada because I thought gold was going to go up after Donald Trump got elected. And certainly it did. It went up by, I believe, $1,000, close to $1,000 in a very short period, which skyrocketed Franco shares, and I made good money. So that's just one prime example of how to do this. And so that is what I'm going to be doing. I'm going to be studying these markets. I'm going to be determining, and I'll share with you which sectors that I'm looking at. And this is what my new homework assignment is going to be. And I will be coming back talking less about Donald Trump and the propaganda government that basically manipulates, lies, steals, and destroys. Idol worship. I will not be talking about that quite as often. I know lots of people like to hear about all that stuff. It makes them feel alive when they talk about Donald Trump and Joe Biden, the left wing and the right wing, and it makes people feel like they're engaged, you're part of some kind of cultish community. But I'm not going to always talk about that. I'll talk about that when it's entertaining, when it's worth talking about. But at this point in time, it's just a charade. There's a lot of propaganda involved. There's a lot of manipulation involved. There's a lot of chewing gum and string wire holding everything together. There's a lot of money being injected by the Federal Reserve. There's a good cop and bad cop, Donald Trump versus the Fed. I mean, there's a lot of stuff going on. It's all designed to throw sand in your eye and cause disorientation and confusion. But let's just keep our focus off all that stuff right now. You're never going to get rich thinking about Donald Trump and the left-wing Democratic Party. You're never going to get rich thinking with those morons, those idiots. You're going to have to take the focus off of the political nonsense and put it into things that could generate your wealth. Look out for yourself. You know, I don't mean to be selfish, but let's just not focus on the broad aspect of